What up, everybody? Welcome to another class full of gems here at BTSMC. It's a lot to talk about. The market got very eventful last week, finally, right? Because for 2 weeks in a row, we were stuck in this consolidation, and everybody was like, hey, I might never trade again because this is extremely boring. And I ain't even mad at you. I ain't mad at you at all because I was feeling the same way. Like, man, I ain't trying to participate in this. I'm about to go on vacation or something like that. And so we finally broke the range. Beautiful. But there's certain things you got to look at when it comes to like a breakout. Not every breakout is created the same. So what I didn't like about this breakout of this range is the nature in which we are moving up. If you look at even the hourly, which is not even like a major time frame, right? We're not talking about the daily or the weekly or the monthly. Like, no, just a simple hourly time frame. If you could count fair value gaps on this hourly, you got like two very small ones right here, which almost don't even count. I think there was like, I don't even know. You can see a small one up here, but we'll talk about this one. This one was important. I'll explain more about this one in a second. But basically, this entire price leg on the breakout had no fair value gaps. And a person might say, okay, Rel, what does that mean? Like, there's no fair value gaps. I don't care about that. I'm telling you right now, throw away your volume indicators, throw away all that stuff. That stuff don't mean nothing. The best way to see real intention in the market is through fair value gaps. So every time I see a price leg that's lacking fair value gaps, it's telling me a lot about real intention in the market. So right here, I'm like, yo, I already know this is not gonna work out. But can we rewind for a second? I released a video last Saturday before this week even started, back when price was right here. Price was right here when I made my video. What did I say on the video, everybody? If you haven't checked it out or you haven't been following me for a minute, on the video I said, what I think will happen next week is that price is going to make a move to the upside. All right. And it's going to stop right here at the 50% of this blue area. And then it's going to come back down and make a new low on NASDAQ. This is literally right here is exactly what I drew last week on Saturday. This exact arrow. Let me actually make it more specific because I literally stopped it right at the 50%. It's on the video, of course. It's literally the last video on this channel. All right, if you're watching this on YouTube right now, so you can go and check that out. This was my projections. And so what do you think? I'm thinking as I'm watching the uptrend part of this arrow happen. If I'm looking at the uptrend part of my arrow happen and there's no fair value gaps, you can think in my head I'm getting increasingly more confident about the analysis that I put out. If you've been following me for a while, you know that probably 90% of the predictions I put out come true. Because I do tell you guys this market is very predictable when you learn certain things. But still, anybody can have an off day, anybody can get something wrong. So for me, I'm like, yo, I believe this is going to be another correct prediction because of the manner in which we're moving up. So your first lesson here to remember is look at the nature of your move. If you're looking at a lack of fair value gaps, it might be a fake direction, and the other side is going to be way prettier. And let me do a spoiler alert for you. Yes, we did plummet all the way into making a new low. Like, this is exactly what happened right here. Like, this is spoiler alert. It did exactly what we said. They actually gapped up first. So remember, when I made the video, we didn't even have this gap. We literally gapped up and ran straight higher, and then fully did exactly what I said. So something that was not a good sign for people on this breakout, I would say, is on the 4-hour chart. Let me go to the file for a second. Actually, I'll get back to that point. My fault, y'all. I'm gonna get back to that point. Don't even worry about it. Don't even worry about it. Now let's get to this. Let me show you this blue area real quick. Show you the blue area real quick. All right, so this blue area, what this was a weekly bearish fair value gap connecting to a VI. I'm not going to go through VI right now, but I'll talk about just the fair value gap and why it was important for us. For me, I've been very vocal since price was, y'all know I called the top of this bear market. If you've been following me for a while, once again, I called the exact top of the potential bear market. Regardless, it's a market correction, at least I call the very top of it. And one of the first targets I had is these lows right here, this lowest body of this weekly swing point. And so my point is, if I already am expecting lower prices on the weekly chart and price hasn't gotten there yet, See, price didn't get there yet. Why would I get bullish just because I see some green in the market real quick? Please understand that the market doesn't move in a straight direction all the time. There's going to be pullbacks, but if you know where the market is going ahead of time, you know what to look for now. You should be looking for PD arrays that can send you right back in your direction. So something that was good that I seen, actually, hold up. Price is fractal, ladies and gentlemen. Price is fractal. So remember what I explained on the hourly chart, how the hourly had no fair value gaps on it, and I'm like, oh, that's suspect. What do you think I was thinking about as I watched this uptrend happen on the weekly chart? Come on now. You think that the concept just is no longer relevant because we're looking at the weekly? No. What I just spoke to applies to the 15-second, the 30-second, the 30-minute, the hourly, and the weekly chart. Every time frame is the same thing. So if I'm looking at a price leg with zero fair value gaps in it, you think I'm surprised when I seen the drop happen on NASDAQ? I mean, not only did I call the drop ahead of time, even 7 months ahead of time, if you consider what I told people about when I was looking at SPY in July 2024, telling everybody SPY is going to reject 611. I mean, back when price was down here, I said SPY is going to reject 611 and start a bear market. That's on video, and start a bear market. I mean, so when I see the run up here be extremely choppy, how it looked, and I see NASDAQ doing the same thing, and then SPY gets to the spot and they all reject at the same time. I mean, I'm not surprised that this whole price leg is happening. On top of that, guess what I see in this price leg? Guess what I see in this price leg, my people? Fair value gaps. OMG, don't we love that? Don't we love that, family? Don't we love to see fair value gaps in our direction? That's a great sign. So boom, this fair value gap right here. When I see that form, I don't want nor expect price to come back to this one. So what am I focused on? I want and expect price to come back to this blue one. So let's go back to the hourly right quick. Okay, so that blue one that I just showed you from the weekly time frame is this area that you've seen us reject this week. Am I surprised to see this rejection? No, because I already got direction from the weekly time frame. So what is your takeaway so far? You need to make sure you're doing a top down and include the monthly and the weekly in your analysis. But at the same time, you also do need to know what to look for. You also do need to know how to determine where price is going ahead of time, which is a topic that most people couldn't tell you, whether they're smart money content creator or not. That's why people, find it like really strange that I'm like calling out the market ahead of time, because they've never seen people do that, at least not consistently. Everybody can get lucky here and there, but like on a weekly basis, on a daily basis, it's kind of like, okay, what do you know? But it's not just me, it's my mentees now. So shout out my mentee because they know the same things. And like I said, I would say that's the one thing that I really do recommend the mentorship for, because I need time to build that out so you guys can understand how we could get to those destinations, knowing where the market goes. But for me, like, since way up here, I already knew the market wanted to head lower. So it does make it easier for me to then say, all right, even though price is pulling back right now, I'll draw it for you. Even though price is pulling back right now, I know it's going to end up rejecting this area and come back down, because I know we didn't meet the objective yet. I know we're not done dropping. So that's the one thing I say, and I really strongly recommend you joining us this semester in April, because then you'll really be able to, like, it severely helps your trading if you know where price is going ahead of time. You know what I mean? So I'm not surprised it's rejection. Neither are my mentees. They don't need me to say that. They already knew this was going to happen before I even said it. That's the beauty of it. All right, so we're running up here. It's no fair value. Yes, we love that. And then here comes Wednesday. Wednesday, I was not able to participate in the market until the afternoon because I was traveling, So I'm speaking about this part in hindsight, and then I'll show you the play that I did take in the airport once I got off the plane. All right, but this part is in hindsight. So I was screaming at my mentees on Monday and Tuesday, like, yo, there are no high probability setups. There's no reason to be taking trades on Monday and Tuesday. Like, everybody, we just gonna chill. I'm not saying you can't try out a trade or two just in case we trend, but there was no high probability setups based on both upside and downside delivery. I already showed you why the upside is suspect, but the downside is just as suspect. Like, meaning they were both lacking energy. If both sides of the market are lacking energy, you're probably dealing with consolidation. So I'm like, there's no setups. Cool. That was Monday. Tuesday was very similar during New York session. You can see what New York session looked like. It's this cluster of candles right here. Appreciate you, Carmen. She said, join up, people. You won't regret it. I completely agree. And Ranch It Up said, do you only trade futures? I mainly trade futures, but I also trade options. A lot of times I'll be in the futures trade and the option trade at the same time, especially because NASDAQ NQ, right, is the exact same thing as QQQ. So what I'm doing is I'm charting NQ and I'm trading QQQ on my phone via options. So no matter what, I don't really touch QQQ's chart for my analysis because this chart has all of QQQ's candles and plus some. It has more because it shows me levels and liquidity and fair value gaps and everything I need from 11 p.m., 10 p.m. at night, 1 a.m., 3 a.m. Like, it shows me a lot more information on a futures chart, and those liquidity levels, those PD arrays, all these things are still relevant once 930 hits. You feel me? It's not like they just become irrelevant because it's 930. Nah, I target those things. So like, if I could find an example, like, let's see right here. All right, beautiful. This is 4 a.m. These lows right here, when we move to the downside, this is something that I would easily target, right? Like, it's a swing low. It's liquidity here. But a person on options wouldn't even see this liquidity level because it's from 4 a.m. I mean, if you use pre-market, maybe pre-market starts at 4 though. I believe pre-market starts at 4 a.m. So maybe you would have had this one if you turn on pre-market, but you definitely don't have liquidity that exists prior to that. You don't have the liquidity that exists prior to that. So sometimes, like something we target, like make sure y'all watch out mics so you don't come off mute. Something we target would be like lows from, let's say, Asia session. So you might see a low that formed in the market at like 10 p.m. You're not going to see it on the options chart, but I would because I'm looking at futures, and I will still take QQQ puts into those 9 p.m. lows that I saw on NASDAQ. So I just don't see what's the point of charting, making my charting analysis on QQQ if I could get all the same information and then some. Just make sure if you guys do what I just said on TradingView, you pay for data. I'm gonna give that disclaimer right now. Don't miss that detail, okay? It costs like, I think like maybe less than $10 a month, and you can have all the futures data real time. If you don't pay for that, you're gonna watch everything 10 minutes behind time. Feel me? There's a 10-minute lag. All right, cool. So back to the topic. Consolidation in the market here. Let's go towards the time at 9:30 when the market opens. My bad, I moved a little bit fast, but it's okay. So notice what I've drawn out here. I've drawn out the word consolidation. Oh, mind you, my fault, mind you. We topped out here in the previous night. So this is Tuesday night at like 8 p.m., 9 p.m. We topped out on NASDAQ exactly where we expected the market to top out at. So once again, you seen me say it the previous Saturday. I said the market was going to top out right here around the 50% of this blue area and then come to the downside. So you're already suspect about further upside if you understand what we know about PD arrays. You're already suspect about further upside. So when you notice the market top out, it starts to make a decent move down and then it starts consolidating for the most part. In my opinion, even though you're expecting further downside, you need to wait for a high probability move. So I know you expect more downside at this point as the market opens here now on Wednesday morning, but like let me circle it so you can follow. Look at all of this consolidation prior to the market opening. I would just wait for a breakout of these lows. You feel me? I wouldn't really believe in anything to the upside, because if it went to the upside first, I would short this and take it to the downside. That's one way to trade that. Or you could just, once again, simply take the breakout. All right, but what did I tell y'all about breakouts and consolidation? If you've been with me for a while, this should be like, I should sound like a broken record to you. Like, y'all know, if you're going to take a breakout of consolidation, then there needs to be a fair value gap on that breakout. I'm not sure what you mean when you say the chats, Rashida, for your question. The chats. Not sure what you mean by that. So like here, all the charts. The charts have a DNS. I'm not sure what you mean by that though. Where do you see that on TradingView? I don't know where you see that. But I'll try to get back to that question. Let me break this down here. So you see, once again, I'm waiting for the breakout of consolidation. We broke out the first time right here. Let's see if we broke out with a fair value gap. Beautiful, nice breakout with a fair value gap. Now, what's the second step? You don't want to just see it. You want to see price respected. So let's say you took this initial breakout and your stop loss is above the fair value gap. This is where you would get stopped out if you took it. Cool. So you take a small loss here, about 10 points, nothing, and you sit cash. In my opinion, I wouldn't trade the upside because the upside does not match where I think the higher time frame is going. To me, it's just price is still consolidating. So I wouldn't trade that. I would wait for the next breakout and I would look for the exact same thing. So here we run the lows. Notice we just ran the lows again, right here. Boom. This is our second attempt to take NASDAQ to the downside. Okay. This is our second attempt to take NASDAQ to the downside. All right. So here, they take the lows here and they push into this fair value gap. And this fair value gap works. Now, this is a fair value gap that has high probability, okay, for reasons that can't really get into. But if you start to learn high probability fair value gaps versus low probability fair value gaps, it severely helps you. So seeing this high probability fair value gap play out, even if you didn't know that, at the end of the day, you could, I'm trying to see if you didn't know that, how you could take this trade. Because you're getting the breakout you wanted, right? We tried a consolidation breakout one time, it didn't work. This is the second attempt. Let's see if there's a fair value gap maybe on the 30-second you could have had, or the 1 minute. Let's see the 1 minute. Because I gotta speak to everybody here. I'm speaking to my mentees when I see my mentees know why this is a high probability fair value. But if you're not a mentee, it's like, how would you know to use this one? And so I'm trying to give y'all another way you could have taken it. I think another way you could have taken this is, if you didn't know that, honestly, I would watch to see PD rates being respected on any breakout, no matter what. So here's what I would be looking at this time. I would be looking at how we respected this fair value gap and then came down. Okay, and then I would see if price respected also these green candles, which is what I would call a continuation OB. It's respecting that and coming down again. This is giving me signs that NASDAQ has a bearish objective. On top of that, you have to zoom out. So let me zoom out real quick. And if I'm noticing that price is starting to respect PD rates again, where's price going? Because if it's respecting bearish PD rates, that means it has a bearish objective. I'm gonna say that one more time. If you notice price respecting bearish PD rates, that means it has a bearish objective. Why is that? When the market has an objective, it's going to respect PD rates. When the market does not have an objective, guess what it's going to respect? Nothing. Nothing will it respect. It's not going to respect your indicator, your PD rates, your chart patterns, your candlestick patterns, your support and resistance. Nothing is going to get respected when the market has no objective. When the market has no objective, it looks like this. When the market has no objective, it looks like that. That's what we call a chop, and that's why everybody loses in chop. Not doesn't mean you're gonna take every losing trade in chop. Nah, you're gonna have some bad wins. Notice what I said, that you're gonna have some bad wins in chop. Yeah, for surely. But if you consistently trade chop, you're gonna be inconsistent. If you consistently trade chop, you'll be inconsistent. So my point is, you need to look at whether PD rates are working in either direction. So if you notice they start working in one direction, that means it's probably moving towards a bearish objective. So if I notice that, okay, I like this on the breakout, I like how we have respected a nearby fair value gap and we started pushing down, I may start to ask myself, hey, what are we targeting? So I'm gonna zoom out. Okay, we breaking a 5-minute consolidation. I like this. This is smooth. Okay, what I'm gonna look for is, well, what do we like to target? Price likes to target liquidity. Okay, we got some lows over here, but can we zoom out instead of just going to the 5-minute? Can we really think about what price wants to do? Because at this point, and remember, this whole candle wasn't here initially, so I'm actually retrace. Look, All right. So what I'm gonna think is, based on the higher time frame analysis that we talked about before we ever took a trade today, we wanted the Nasdaq to come to this blue area and reject. Did we not? We did. Okay. What else do we say? All right. Well, we also noticed that the upside was extremely choppy, like no fair value gaps. Dang, what is that usually leading to? Well, usually when the market moves like that in one direction, my fault. Look, if it moves like this in one direction, when order flow shifts over and it's time to go bearish, guess what it's gonna move like? Boom, straight line. That's what it moves like in the other direction. So if it's choppy in the first direction, the second direction, boom, should be super fire. And as a side note, if it's choppy like this, and you notice that it's also choppy in the other direction, I don't trust it. And I also just stay away from price action when it's moving like that. Okay. So that's times for me to stay cash. All right. I feel like I froze because I'm looking at my phone and I see my face up there is frozen. Let me see if anybody, can y'all hear me? Says my internet connection is unstable. It's acting a little funny earlier. Can y'all hear me? I did freeze, right? Okay. Dang, I'm looking at my phone. It looks like I'm potentially back. I think I'm back. Okay. Appreciate you, Anjane. All right, thank you, Lydia. All right, cool. All right, so yeah, people. So my point is, I know, right? My point is, everybody, is that if we moved choppily in one direction, I'm expecting an aggressive move in the other direction until they prove me wrong. So right now, as I'm noticing this breakout, remember, so far we've seen price breakout pretty much under the yellow line, I think. So if I'm noticing the breakout potentially starting, I'm looking at all these bearish targets. I'm like, oh, nah, it's about to have a plummet. Wow, price is about to drop really hard. So I look at the hourly and I say, yo, there's nothing on the hourly that can stop us. There is nothing on the hourly that can stop us from dropping all the way. Oh my gosh, this drop is about to be massive. But are you surprised about that? You can't be. You can't be, because what do we say? What do we say, everybody? The weekly SIBI is supposed to take us to what? The weekly SIBI is supposed to take us to what? Weekly lows. So you cannot be surprised when the signs are showing in the weekly SIBI that we're about to have a straight line drop to weekly lows. There's nothing you should be surprised about here. Nothing. All right. I don't know what you will ever be shocked about when it comes to that. All right. Also, let's go to the 4 hour and see if there's some day trade targets that we could have. All right. So on the 4 hour, you'll say, okay, there's no fair value gaps here. I'm not really tripping about nothing. It should plummet through all of that. Dang, it's gonna stop at this fair value gap and go back to the upside, right? No, you're wrong. We're not tripping about this fair value gap. This is noise. I would just cross this out. This is what we call noise. Why is that? How do you know which fair value gaps to ignore versus which ones to consider? It's a lot that I could say about that. I'm not gonna front. But one thing I could give you today, at least, one thing I could give you is, people, do your top-down analysis so you know the true direction of the market. Did we not establish that the market is going to reject the halfway mark at its SIBI and take us to weekly lows? So why are you sitting at home, why are you considering this bullish fair value gap to take you back to highs? Why? Like, I don't understand. Are you just forgetting everything you established on the weekly time frame? We're not tripping about this. This is noise. It's noise. You feel me? Some of y'all also, I seen people saying this on social media. There's an order block right here. Stop it. It's not an order block. My fault. It is an order block. It's a bad order block in context. And I think that's the biggest issue, is you'll never know how to choose good or bad order blocks until you understand context. Because you may see one that visually looks like an order block from what you learned from that guy on YouTube that was teaching you bad. But the thing is, what he can't teach you is knowing when to use them in context. You know, I'm weak, David. That's an inside joke they would put in the chat. Don't know what I know, facts. But like, yeah, people calling this an OB, I'm like, this OB is probably not gonna work because of context. I believe that weekly is taking us to weekly lows. So I'm not tripping on a 4 hour OB. Understand me? All right, now boom. But if you want some short-term targets, for me, I would say the only fair value gap that makes sense on the short term, on the 4 hour here, is this one down here where I labeled 4H busy. Let me put 4H busy open, just so we know. I'm basically denoting the opening of that. Now, mentees, what P word might occur? Don't think dirty, people. What P word might occur at that yellow line? I just want to hear my mentees say it. At this end, what P word might occur? Thank you, David. Painting. This is paint. So because of a certain concept we understand, that's the reason why I would have that as my first downside target. So because of what we understand about fair value gaps, I'm not considering this one to be a factor. So to me, price is going to plummet through that. And I just hope you know that I'm back on a higher time frame, because if you stay on a lower time frame the whole time, you're going to lose sight of what's really going on. Any retracement, you're going to take profits. Like, oh my gosh, I'm scared. What I do anytime I notice that order flow shifted over, and this is something for your notes again. Anytime I notice order flow shifted over, I zoom out and I say, okay, what is our objective? So first thing I'm noticing is our first objective to me is where it says 4H busy open. All right. Ignore. Hey, let me make this not visible real quick, just for the time being. All right, look. Cool. So that is our first target, all the way down here, all the way down there. Okay. Now, once again, if you know where price is going, you're not really tripping on green candles. But see, if you don't know where price is going, you might be taking profits on here. Like, oh my gosh, like I'm panicking, I'm out of here. But you got to know where price is going by zooming out. So I just want you guys to, like, that's a major thing I'm trying to establish today, is getting you guys to not be so hyper focused on minor time frames. I think a lot of people seen me on the 15-second time frame executing, and they think, oh, so like that's what he stayed on. Like, no, I'm explaining to you guys how a person can catch this whole drop based on how I would be in, like, based on a higher time frame. Even if you entered on the 30-second and 15-second, like I showed y'all, honestly, like an entry here that my mentees might have looked into would be trying out this fair value gap. This is valid. This is a very valid fair value gap to try out. Signature wise, mentees think signatures. I'm talking to them too. Once again, everybody's in the room. Mentees, free people, everybody here. Mentees, think signatures. This is a great fair value to try out. I think it makes the most sense in the world to me. I would try this out, and my stop loss is slightly above it. You risking what, less than 10 points? Try it out. Because after this, if this work out, it's over with. Like, NASDAQ is dead. Like, it's gonna drop all the way. Like, this thing is gonna go so hard to the downside. You could have caught a fire trade, and so let's see how that ends up playing out. You know, even when prices consolidating here, are you nervous? Are you nervous during consolidation if you know where price is going by the end of the consolidation? Are you as nervous? You can't be as nervous anymore because you know it has not met its objective yet. So when you really understand market objectives, it really keeps you calm through the noise. It keeps you calm through news, people's chattery, people saying, buy the dip, all this stuff. You don't even trip about nothing nobody's talking about, because you understand that the market is going to meet its objectives by any means possible. Like, by any means, it has to move this way. It's algorithmically coded to move this way, is all I'm trying to say. So even though it's consolidating right now, it's like, yeah, but we gotta at least come to the yellow line, like, and everything. And I'm not saying like we marry a destination. If you've seen some really significant pullback, take your profits. But from what I'm seeing here on this chart, once we took the breakout trade here, it's really been no reason to sell your trade at all. Honestly, I just don't see a reason to sell your trade at all. So hey, if you don't like this rally, this is probably the first reason I say, yo, maybe you could look into selling here. But like, to me, I kind of want to see another time frame, but I probably would want to see what we do in here. Mentees, I'm just thinking market health when I say that, mentees. I don't even know, I didn't study this on the 30-second, but this is something I look into. Like, if I had a runner, I just see what a runner do right there. If it go above that area, then I'll probably take profits for real. If I had a runner, see what they want to do. That's where I would take profits, right there. if it went above. My fault. My thing is, oh, never mind. All right, so it's consolidating. Let me go to a higher time frame real quick. All right, but that's where I would consider like my first profit take. And you could always get back in. You feel what I'm saying? Because once again, I'm looking at the yellow line. All right, so it ends up dropping back down into yellow. Because once again, objectives had to be met. So on futures, that's probably a place where I would consider taking some type of profits. You know, if I was in options, I ain't gonna lie, I'm not taking profits. Like, because I know where we're going. And a quick point on that is when it comes to futures, you have to be very, very careful when it comes to all the points. Every tick really matters on futures. So that's why, in my opinion, this is a hot take, low key, hot take. Don't kill me. Um, traders, there's a hot take. Don't hurt me for this, yo. But traders who can, I feel like who can only trade options but can't trade futures, to me, they don't really understand, like, they don't understand price action that well. I think they understand how to manage options contracts well. It's a difference. If I think to trade futures consistently and efficiently means to me that you understand price action for real, because them ticks dead matter. But on options, you could just size a contract in a manner that you don't really care about too much and just, wait till it hits your target without really any like level of like true expertise on price action. Um, Carmen said in the past I would have been offended. I swear I'm not trying to offend nobody. I just, mind you, I trade both people. I like futures and options. That's my take as a person who trades both markets. Like I realize like options is so much easier for me to just like, because when I know where price is going, I'm just like, yo, I don't really care if I'm in a certain amount of drawdown because like I already sized my contract in a manner that is like I'm okay with that drawdown percentage wise. But on futures, nah, yo, these points matter. Every little tick against you matter. You gotta protect that. You gotta really like listen to price action. If they invalidate a fair value gap that you don't like, you gotta actually get out the trade for real. Options, you could like let it play around. Like, yeah, I know where it's going. It'll be there by the end of the day. I'm chilling. You can go play video games or something like that. Facts, like David said, he got some of them cheap contracts right now. That's how it go. Like you side it a certain way, you be okay. Yeah, like Carmen said, she's seen the light. Join the mentorship, people. She highly recommended. I appreciate you, Carmen. Um, you on my piece. Nah, like I swear, I promise y'all know I love y'all. I'm really not trying to come at nobody. Once again, I trade both markets. That's my honest take. Like it's easier to trade options. Futures, you have to really know price action to manage your risk properly. And so that's why I say, like, if I was on futures, yeah, I'm gonna actually take profits if it invalidated this fair value gap right here. Like for me, once I seen that, I'd have took profits. I could always get back into the trade. Like I could have caught this price leg, you feel me? I get back into the trade. I ain't tripping. On options, man, I'd have let that thing retrace on options, play around, because I know where it's going by the end of the day, you know? So that's just a quick take on that. Yeah, a lot of people here. I know a lot of people here have never traded futures. Yeah. So that I'm just saying. I'm just saying. No offense. All right, back to it. Back to it. All right, so we get to the destination in time. So that's about lunchtime. We get to the destination, and then at this point, anytime we get to a destination, as y'all know, we like to watch nearby PD raise. So I don't really see any here. So when I seen this fair value gap come in, I would have took profits right here. What do I mean? On the way to the yellow line, I don't see any fair value gaps close by. And once we hit the yellow line, which is a target, what do? We made a bullish fair value gap. That's suspect. I'd have took profits. Probably caught a monster move anyways, you know? Not really concerned with this fair value gap too much. So that's why I would take profits here, because I'm not really looking at this one for real. All right. So, yeah. And cool. All right, so that fair value gap I wasn't looking at ends up sending price back to the downside. I'm just telling y'all what I don't like to teach in hindsight. I like to say what I would really do in real life. Like, I'm not really I'm not trying to like wait around to see if this works because I know an objective got hit. So I wouldn't wait around for this. What I would do is re-enter it. Okay, that's what I would do personally. Now, all of this is going on and I'm on a plane and then I get off my plane. And then now all of this is still going on while I'm on the plane. And I'm about to show y'all something. Okay, so I get off my plane probably around here somewhere. I'm walking a baggage claim and I'm looking and I'm like, what did the market do in my absence? Like what they got going on here? And I'm like, dang, we really dropped out of that area. That's crazy. And I'm like, oh wow, the NWAG. Some of y'all like NY. Is he talking English? Is that some type of like Native American type? No, 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 no. Look, NY. It's the new week opening gap. What that is the gap that is created when a new week opens. Isn't that like amazing how they put that together? The gap that's created when a new week opens. So we call it the new week opening gap. The NWAG. Simple. So you see, between Friday and Sunday night, price gapped up and left us in the market, and it never came back to it. I cannot remember the last time that this did not get addressed, especially in the same week. So I know that this gap is going to be traded back to. By the way, which I also said to my mentees during our Monday class, on that very same Monday, I was like, I'm so convinced we're going to drop out of this blue area because we didn't even come back to the NY. So that's how I really knew. Like, it's like another confluence. Like, bro, we're not leaving this open. Like, the market is not reversing right now. Everybody in here said, I told you to buy the dip. The market's going higher. All that. I'm like, bro, y'all don't even know what y'all looking at, man. And y'all seeing what's going on. We came right back. So the first baby target is the NY. So seeing that so far so far today, price made an aggressive move while I was on the plane, of course. You know how they like to do it. That's what they do, man. Like, they foul for that. They don't care about me for real. They foul for that. I'm like, bro, we didn't come all the way this far down to not touch the NY. So how do I get into this trade? Well, in my opinion, not in my opinion, I'll tell you this, I'm gonna say this as a fact. You should never enter any trade unless you have a destination ahead of time. So it's actually imperative that you guys learn how to know where price is going ahead of time. Because if you don't know where price is going ahead of time, you are gambling. Like, I'm sorry to break it to you, but you're gambling. Because, for example, let's say I'm gonna get in sells or puts. I'm gonna get in sells/puts, right? If I don't know where the market is going ahead of time, aren't I just kind of hoping real quick, like, please go down, like, please go down. Like, I know a red candle formed. I'm hoping another red candle comes in the market. Like, you're gambling. Yeah, and my fault. Something happened on my phone. You're gambling, and like Alexa said, I can't believe people trade with no bias. It's weird to me. That's why when people say things like, don't predict the market, just react. It's just like, no, you have to react. I hate that's another hot take. If somebody's telling you like, don't predict the market, just react. Like, I just feel like it's because you can't predict the market, so you have to react. But it doesn't have to be like that for everybody. We predict the market, and we know how to tell when we're wrong. And then we're going to predict in the other direction because we know if it's not moving this way, it's going to go to that objective instead. But regardless, we're always trading with a bias. And if neither of them play, guess what? That means the market has no objective right now and we stay cash. But like right now, I know the market has to trade into this NVOG. That's an easy prediction. And so these is very important highs here on the 5-minute. Mentees, do y'all see that lesson? Quick message to my mentees. Do y'all see why these highs is very important? Mentees, yeah, hopefully y'all see that. Okay, now cool. So I'm not expecting, nah, that's cute. I'm not expecting price to cross over this green wick at all. So when I notice that price rejects let me go back to the 5-minute, my bad. I'm not expecting price over that green wick, okay? I'm not expecting it over this green wick. Something we look at is the highest body at any given swing point. The highest body, look where my yellow line is, the highest body out of this cluster of candles on this pivot high. That is something that price tends to top out on if you have a bearish objective in the market, like we did at the time. And so when I watch that price comes here, it's refusing to go above. Price comes back here, it's refusing to go above. But let's zoom out for a second and look at this. What do you people notice about this uptrend? There you go. OMG. Do y'all see why I rushed to sit down next to my suitcase? I rushed to sit down. I got my laptop out. I'm like, oh, nah. I'm about to catch this. I'm about to catch this trade because this uptrend, this is nasty. We chopped our way. Exactly, Abena. It staggered its way into a rejection area. That's gorgeous. And so guess what's about to come? Boom. I know it. I know it. I'm waiting for that. And I'm about to eat off of that. And so all I gotta do is wait for order flow to shift over. After we hit the spot, when I'm peeping is this. After we hit the spot, when I'm peeping is this. I'm like, oh shoot, huge fair value gap. Dang, that's one of the ones, right? And then price comes into it, rejects the lower half beautifully, breaks down. I'm like, okay, I know what I'm looking at. I'm taking my shot at this. And so then I get into my trade. All right, I don't expect price to come back above this wick for real. So for me, initial stop loss is based on how price trades with this wick when I get into this trade. So it may look like a breakout trade to you, which is okay. I do take breakout trades, but I take them with a strategy. I don't just take breakouts because I'm FOMOing. I know where price is going. Quick side note. If you trade breakouts, which is okay, but you don't believe that you should be able to predict the market, you're once again gambling, because you're just hoping that, yo, if we cross back over this green wick, I'm taking calls and I'm just gonna ride it until it stops being green. You gambling, you hoping, you praying to God they're not gonna sweep. I don't do stuff like that. Like if I'm gonna take a breakout, that's because I know where price wants to go right now. Price wants to go to the gray area. That's where price wants to go. I know that already. And so if I'm taking a breakout trade, it's because I know that price is heading to the downside for the gray area. So I'm just trying to like help y'all see things clearly and just block out noise that people be saying. Like people say things because they can't do it. And because they can't do it, they try to project that onto you. But like, don't listen to that. It's very possible if you learn certain things, you'll really notice that the market is 100% predictable. It doesn't mean you'll be right every time, but you'll be right a hell of a lot of the time if you learn certain things. All right, so either way, that's where I got in the trade. And here's the my fault. Here's the visual of that. This is where I got in. Should be pulling up any second now. Let's see, y'all see. So this is what I seen. Y'all see my entry right here at 126. And yeah, so that's how the play ended up playing out. I think my laptop is lagging though. They being annoying. But I definitely, all right, whatever. But you guys see it. So that's my entry. And then you see it was pretty much a straight line move. Pretty much a straight line move down. And then it played out. So let's see. Nothing to panic about, right? I'm not really worried about these pullbacks because price already proved to me that it's ready to head to that objective. So I'm not really panicking on anything. And when you zoom out to even the 1 minute here, what else do you think I liked about this trade? I liked how the 1 minute also was lacking fair value, guys. Look at this. Look at the 1 minute. So 15 second, 1 minute, all of that stuff. Plus I had a bearish objective. So to me, this is just like a super easy hold towards the downside. Like I know where we're going. Like I'm not even tripping. And if it didn't touch it yet, I still held it until it touched it. Let me see. I remember it was acting funny towards those lows. Okay, I did. It did. Once it touched, okay, yeah. Yep. And then this is where I exited my first contract, and then I exited my second contract once we crossed over this green candle. All right. So yeah, first contract on the touch, second contract over that green candle, and then that was that. And so that's how that trade went for me. But yeah, solid like entry, no drawdown game, because we taking the proper breakouts in the market. That's why there's barely any drawdown, because these breakouts tend to hold. But how do you get a breakout to hold? How do you choose the right breakouts? You have to first know where price wants to go ahead of time, and you have to look at signatures into your rejection level. So the signature that I've been like preaching about so far today, I'm trying to keep a central theme. If y'all can't tell, central theme is one, don't trade. Like, let me recap for a second. One, stop trading without a bias. If you don't know how to get a bias, you should seek that information. I have that information personally. You can seek me. If you don't trust me for it, that's up to you. But I do suggest that you learn how to get a bias in the market. A lot of people don't do it well, in my opinion. That's why a lot of people are not able to put out predictions publicly and stand on them and notice it being correct on a consistent basis, because they don't know how to determine a bias in a good way. But if you've been following me for a while and you peep that what I say is going to happen in the market happens often, clearly I know how to determine biases well. So yeah, I think if you don't know how to get one, reach out and we can see how we can get that information to you. But determine the bias, that's your first objective. The second thing you should do is look at, learn about PD arrays. So 5-minute highest body, that's a PD array right there that I shared with you guys. All right, so that's how I knew, for example, to look for price to turn back around. Because even though price is moving up, I know the play is not ready yet. It has to get to some type of bullish objective. Guess what that bullish objective was? The highest body. Cool. Now that we got to the bullish objective, what do I expect price to do? Find its way back to the downside. So I'm watching order flow shift over. Now that it's shifting over, what I'm doing, I'm wondering, okay, what's the bearish objective? Oh yeah, that bias thing we was talking about. Oh, the gray area facts. It has to come down here. Dang, well, let's see. Like, is it respecting PD arrays on the way in my direction? On the way to my direction. Yeah. We got this bearish failure that price just rejected, created another one. Right. And I mean, like, literally, it's just really just no drawdown. We just honestly just kept dropping. It's not really much to teach on this one. But my point is, like, you know, until you get to your destination, them PD arrays, they gonna hold. They gonna hold, because once again, a central thing you need to realize is that when the market has a direction or an objective, it is going to respect fair value gaps. People's biggest mistake with fair value gaps is that they're trying to take fair value gaps just any and everywhere, and they don't really know how to tell when the market has no objective. And so you might have learned about fair value gaps from whoever, but people try to use fair value gaps in the wrong times. Like, I wonder if I could find an example within some type of chop here. Like, I don't even know. Yeah, I could look at this chop section. All right, so look at this like choppy area of price action. Let me know if the fair value gaps is working in this area real quick. Maybe I'm bugging. I see a small one right here that price traded through. I see a green fair value gap right here, price traded through. I see a green fair value gap right here, price traded through. A green one, price traded through. A red one, price traded through. A red one, price traded through. A green one, price traded through. A red one, price traded through. I just like, how many losing plays did you just take in here? You know, it's like 8 losses in one little section, because you think like every fair value gap is supposed to do something for you, but you need to listen to the signs. If your fair value gaps are not working, that's because the market is not actually trying to go anywhere yet. And so you need to wait for the market to, for it to be time to move. So something we speak about often is something called time and price theory. We believe that this algorithm that we trade is based on time. It's a time-based algorithm. So even though you might have a beautiful looking setup candles wise, oh my gosh, what a nice fair value gap, what a nice order block, what a nice whatever. If it's not time for that move to happen, it's noise. Okay, so that's what I'm trying to say here. Like, I wouldn't fight price action. If I'm noticing that very nice PD rays are not working, I'm gonna chill and wait for them to start working again for me to get back involved. Look how when it started moving, it moved. It was choppy, but it at least moved one directionally towards the target. But in this little section, the person could have got caught up trying to play the upside. So just ignore the nonsense and wait for the breakout towards your direction. Then when we get there, look at how we flipped over and really dropped though. This is the real move. You gotta keep the real move. You gotta keep the real move in mind. Like, yo, I'm up for, you gotta keep the higher time frame in mind. You shouldn't even be surprised that we dropped into the gray area, because we've been targeting the NWAG since the start of the week. Like, since the start of the week, we were looking for this move to happen. So when we got so close to it, pretty much when I got off the plane, when we got so close to it, you shouldn't be surprised that price turned back around. And by the way, this is what we call engineering liquidity. Put an E for engineering. This is called engineering liquidity. So they set up relatively equal lows here right before the actual objective. Why? Because they want to bait you into thinking that this is a support level. So when you see, you know, a low formed, another low formed in the same area, what did you learn? 2 touches, boom, that's support. They rally, choppy rally. You know the true objective in the market. So you need to see this not as a support level, but you need to see this as liquidity. Okay? Price gonna come back and destroy that whole area. You about to take calls here, you about to take buys here, thinking it's gonna be a triple bottom or whatever the heck. But I'm looking at that as an engineering of liquidity because I know that the market is not done dropping yet. So I don't know if it sounds like it, and my apologies if it does, but it's not me trying to brag about knowing where the market is going. It's more so me actually trying to like smack you in the face with a belief system. Low key, like I'm trying to show you guys that the market is predictable, and it's at your advantage. It will be to your advantage to learn how to predict it instead of fighting that information or fighting that belief. Like, nah, it's not. It can't be predictable. No, it's like it makes no sense. Like, how could it? Bro, stop it. You're hurting your own self. It could be an extreme advantage to you to know where the market wants to go ahead of time, because all you have to do is know how to find good entries and know how to learn time and price theory, and then you'll play into those targets. So it doesn't mean you have to hold from the top, right? Like, I'm not saying you got to hold from the top, but like look at me. Like, I could just get off a plane and make a few $1,000s really quickly by knowing where the market wants to go. You don't have to be in the trade all day. You don't got to do that. All I did took this yellow line to the gray. That's it. It's, you know what I mean? The reason why I knew how to go short here instead of believing in this uptrend is because I understand the objectives in the market because of the predictability. Now, peep game. People who trade market structure, guess what? They called this. Let me erase this so we stay focused. You trade market structure. What is this called? It's called the change of character, right? It's called the change of character. So if you trade market structure solely, what are you thinking? Oh, we changed character to the upside. Guess what? We're bullish now. Higher low, higher high. That's what they teach you. Do you see why I graduate all my students from traditional market structure? Because it can lead you in the wrong direction if you don't understand true market objective. So if you trade market structure, once again, you think that we got to change the character and you're about to go long. But me, I already know, like, nah, the market not done dropping yet. So I'm looking for PD arrays, 5 minute lowest, 5 minutes highest body. All right, I'm looking for PD arrays, 5 minute highest body. I'm looking for objectives to get hit, 5 minute highest body. I'm watching order flow shift over to take me to the objective. All right, that's that. Now, price play around a little bit. You see, we got there, play around a little bit, and the next day opened up. So I'm getting to the next day. All right, I moved too fast, but it's okay. Look. Oh, I need that fair value gap back. Hold up. Show that on the minute and the second time frame. Need that. This is important. Let me show you why it's not good to marry a destination, but you need to marry delivery. So look, my people. Let's erase some of this. You don't need this no more. You don't need that. We don't need that. We don't need this yellow line. None of this. Perfect. We don't even need NWOG no more for real. Only thing I can say about NWOG is at first we had bounced on the 50% of it and pushed up. I'm telling you right now, like I mean, obviously based on the weekly time frame, I knew price was coming down here, but I super didn't believe in this bounce because I understand we're gonna fill out the whole NWOG. So even this is like an easy short, like, but that's another story. Anyways. Why is price consolidating initially right here? Because we're in a unmitigated fair value gap, right? You could even include NWOG. We're in an unmitigated gap, and we're also dealing with a bearish fair value gap. So whenever we're in between a bullish PD array and a bearish PD array that are both valid, that tends to be the time when consolidation hits the market. You'll notice that the market moves really smoothly. I'll just show it. Yeah, it moves really smoothly once we lose the turbulence area. So this is where turbulence is, and it's a little choppy, but once we finally lose that area, you see how the market moved. Like, yeah, it got up out of there, right? Yes, it did. All right, so that's for one. Sometimes you just want to stay out of turbulence areas and wait for price to lose that area because it's a really smooth journey after. Anyways. Now, some things I want to talk about in here for y'all. So, you know, I have a live trade on Thursday, right? Thursday morning. By the way, the night before, so this is Wednesday night. On Wednesday night, I put out analysis in the chat. I said for NASDAQ to move lower, we need to see NASDAQ reject what? the lower half of this blue area, and y'all seen price did that. So keep in mind that I am looking for NASDAQ to move into the lower half of this blue area. I'm already thinking price is going to do that. Now, here's what you'll notice. This, I'm thinking price probably want to come here before going lower again. But guess what? Sometimes the retracement you want doesn't happen. Price just keep going. Y'all know those moves where like you want the retracement, but it just keep going. You're like, yo, y'all not letting me in. What's up? That's the potential scenario that we're in here. So here's how you can handle that. I personally was not interested in anything inside of here because this is consolidation. You knew it was consolidation once this initial drop right here did not take these lows. And we pushed up and we did not take these highs. Didn't take the lows, push up, didn't take the highs either. Stay out of this. You get caught up in some this is gonna be bad price action. All right, anywho, I'm open to taking breakouts under these lows. Other than that, I'm not really interested in NASDAQ. If it doesn't hold this breakout, guess where it's going? If it doesn't hold this breakout, guess where it's going? Back into the blue area. Plus, there's relatively equal highs up here. Anytime you see relatively equal highs in the market, they become a target on the upside. All right, so let's look at how we deal with the breakout, which is once again, I'll entertain the breakout. I'll entertain it because it's moving in the direction that I want price to go in. Y'all know I got all these targets to the downside, right? So I'm always willing to take a breakout in my higher time frame direction. So once again, this is on the live trade here. Price opens up. We don't take anything because it never actually ran the yellow line. Boom, comes down. Take like a scalp to the downside, but it's moving so funny. And the next thing you know, price does what? Starts to push to the upside with a fair value gap, mind you. I'm like, that's suspect. If this breakout was gonna hold, why is it coming back to this consolidation area? Right? Remember, I didn't want to take anything in. So I'm like, why is it coming back to this consolidation area? Plus, it got a fair value gap. So here, but I tell everybody, I'm like, yo, everybody, I'm going long, and my stop loss is gonna be based on this 1 minute fair value gap to the upside. Where's my target? So my first target is this green wick. My second target is, I think, this high, and then my third target, which is the main place, is once again the blue area. Okay, once again up here. So I'm thinking we can have all the way up here. So I'm thinking we can have like a pretty nice trade here, as long as this could hold, as long as this fair value gap could hold. So I get in a trade. My stop loss is, let me see where we bottomed at. Yeah. I think my stop loss was based on a 50% of this wick. You see this green wick? Why is that? Let me show you my stop loss. Why is that? My stop loss is here because if you remember what I teach you about fair value gaps is we want to see bodies hold the fair value gap. We're not really concerned with wicks. It can wick under the area all it wants to do, but as long as bodies hold it, the fair value gap is valid. So for me, I'm like, all right, I'm giving it room. You feel me? I got the blue area. My trade is based on, I'm giving it a little bit of room. Yes, they tagged me out right here. Boom, took a loss. Boom, they did me filthy just to still hold the fair value gap beautifully. Held it beautifully, and then they ran. I'm like, all right, I got that. Guess what? I got right back into the trade once I seen it was going my way. Got back in the trade. We trimmed at the first target. Trimmed at the first target right here. Beautiful. Here's what I did. This still can be bad to this day. I ain't gonna lie. Look, let me show y'all something, man. I got a runner now. I'm like, yo, honestly, I'm gonna hold my runner. I'm gonna put my stop right here, everybody. Boom. Because I want to see price. If we retrace, price is gonna come to the lower half of this blue area. I did not say upper half. Quick disclaimer, y'all. Or quick note for your notes. Like, once again, stop thinking every bullish fair value gap. Stop thinking every bullish fair value gap, we need to hold the upper half. For some of them, we want price to hold the lower half. This was one of those. So I'm looking for price to hold the lower half of this blue area, and my stop loss is at 20,031. Let me show y'all what happened, man. And by the way, y'all know where the target was, right? The blue area up in here. So I'm like, all right, cool. Price start consolidating all crazy. And then boom, tag me right there, man. Crazy, ain't it? Right there. Like, it's like they was messing with me that day. I don't know. It just be like that. Because price held the fair value gap at the lower half. Literally exactly how I said. The lower half held the fair value gap, everything. Like, it just happened to grab my stop loss before running. Absolutely running. Absolutely running straight through, to and through the target. And it just be like that, people. I didn't lose money, right? I still made money, but like, y'all serious? So it'd be like that sometimes. But nonetheless, what's the lesson out of this one? The lesson out of this one is don't marry a destination. I know that the higher time frame is telling you that we want to move lower, but like if the breakout is not holding, don't keep fighting price action. Like if we were really gonna hold this breakout, it wouldn't have, first of all, it would have never went above this green candle. I can tell you that much. It would have never went above that green candle. But also, there's literally no fair value gaps on this breakout, so it's super sus. And then the only fair value that gets formed, the only one that gets formed is a bullish fair value gap. So that's literally opposite of your trade. And so you can scalp to the upside in that scenario if you want to, which is what I did. And yeah, I mean, you like literally, I know they stopped me out twice in unfortunate ways, but like let's say my stop loss was a tick lower on this day, you're catching the trade from like, let's say 19,960 to like, yeah, this trade is going crazy for like 200 points almost, or over 200 points, I think. Yeah, over 200 points, because you're not marrying your destination, you're marrying the delivery. And so that's something I feel like people do often, is they marry the destination. Like, nah, don't do that. And it went up there. But then here's a big sign that you should have never traded after this. Let me show you how to know to go cash. All right, so we break out. Obviously, this thing goes well over 200 points now. We really going crazy on this trade. But you see, the thing is, my people, notice that we just swept. My live trading is not just for mentees. No, if you're watching this on YouTube, the live trading link is in the description. And if you want the live trading link, also ask me after class, or DM me on Discord. I'll tell you how to get involved in that. But yeah, so look, here's what I want you guys to notice on how to go cash, because people always ask like, yo, how do you know that low probability conditions are about to enter the market? What do we just do? You have a consolidation right here. We failed to break out to the downside, meaning there was a sweep. That's cool, good. That means the upside direction needs to be aggressive, right? Okay. Notice what we just did. We just broke out to the upside. All right, so I'll tell you right now, it's gonna be very low probability if we come back into the consolidation. How you gonna sweep both sides? Like, nah, we don't do that. You gotta sweep just one of them. If you sweeping both sides, that's a very bad sign. So let me show y'all what ends up happening. We swept both sides, and then you notice that the market pretty much consolidated in that area. Look at this. This is low probability conditions. We have literally no direction right now. You might get little scalps in here, but you probably gonna blow an account before you catch a good scalp. So I will stay out of this, and that's exactly what I did. I ain't taking another trade. Ain't taking another trade that day. So that was it. Like, to me, it's like, okay, the next time I would even think about getting involved in price action is what? You guessed it, a breakout in the weekly direction. Yo, a major point, people, and exactly, T.O. Both sides are giving doji energy, exactly. Yo, a major point for you. You notice so far on all these demonstrations, notice I'm always doing these breakouts to the downside. Why is that? Because it's matching my higher time frame direction. Do you see how important it is to enter a week with a higher time frame direction? Because I know that anything to the downside, I believe in that for real. Anything to the upside, I know it's coming back for something, right? Anything to the upside, I know it's coming back for something. So retracements are opportunities for real. And anything to the downside, I'm trusting that breakout as long as it's holding PD rays. I'm trusting that breakout. until I meet my weekly destination targets. Until I get down to these weekly targets, I'm trusting them breakouts. That's what my price alerts is set on. /PD arrays. I don't want to trade consolidation. That's where you blow your account at. But opportunities existed up here in the city. Opportunities also exist under this breakout. All right, so that's how Thursday went, and then I'm gonna do one quick one on Friday. Then we're gonna move on. One quick one on Friday. So that's Thursday. Boom. All right, so first and foremost, what do you notice here? We break out, and then price did what? Respected this fair value gap on the hourly time frame. See what I'm talking about? We're gonna respect them PD rays that match the direction of the higher time frame. See how we respected that hourly fair value gap? That's for one. All right, now Friday itself. Let's look at Friday itself here. When I look at the 5-minute time frame before the market open, which is basically everything I just circled right here. This is the 5-minute time frame right before market open. Do you think I'm interested in trading inside of here? I'm not. Please don't ever think. I'm never trying to trade inside of consolidation ever again for the rest of my life. Literally type of time I'm on. All right, so for me, I'm like, yo, let me know when y'all outside of that area, and then I'll really be like trying to see what's up. All right, so I'm waiting to see what price do if it could lose these lows. Notice what it did right here early in the market. Early in the market. Facts, Mary, for the rest of my life. Yo, early in the market, you'll notice that we swept those lows right here. See, this happened at 9:33. 3 minutes into market open, we swept those lows. So what do you think I'm looking at during this time period to tell me if it's going to continue? I'm so glad you guys are finishing my sentences at home right now. Y'all should already know, yes, I'm looking to see what we doing right here. Is we respecting this or not? Boom, didn't respect it, so I'm chilling. Listen to the side. Oh, we took this trade on live, by the way. And once we disrespected this, I went long. Guess what my stop loss is based on? This fair value gap. I went the other way, actually. I'm like, oh, we didn't respect that? It's a fake breakout. Took this trade instead to the upside. we scalped it to the upside instead. And then I took profits up here. If I'm not mistaken, it was around here. Regardless, took profits on this scalp because I didn't trust that we would move much higher. Yo, Rel, why didn't you trust that we move much higher? Why didn't you target higher? The reason I didn't target higher or expect us to move too much higher than this is because I did not think that we were going to have, like, basically, I guess a short way of saying it is it did not match the higher time frame direction. So I didn't really believe in it. I felt like we were just going to stay in chop for a little while. So anything to the upside is going to be short-lived. I'm not expecting a upside breakout. So I'm like, let me sell it somewhere in the middle of the range. I'm cool with that. Take it from the breakout to the middle of the range. Cool. Take money right there. I could have been done for the day right there if I wanted to. If you take it with the right size. I took it with very light size, by the way, because it's a sweep. I only take light size on sweeps. I say a lot of things in these classes here. It's like I just throw out random gems. It's not in chronological order. If you join my mentorship, obviously it's in chronological order, which you should know first, second, third. But like, I just be throwing out little things. It's like you catch it, you catch. Like something I just said right there, for example, is like, yo, if you're taking a sweep entry, I do suggest that you size it lightly. Size sweeps lightly. And also sweeping against the higher time frame direction is very risky. So when I swept against the higher time frame direction, I took it with very light size. All right, anywho. All right, this was a news candle. Yep, 10 a.m. news candle, chilling, waited for the breakout of the news candle, waited for this, took this initially. My memory is a little blurry, regardless, but yeah, we were in and out of this price leg, but overall we caught 130 points altogether as a team on that live trade. So definitely caught this drop. Had to take an impulse entry as well, which took an understanding of price not coming back to certain fair value gaps. So like it was on a 5-minute time frame, but let me just go there. So at a point, we had to re-enter the downside, right? We took initial plays on the drop, took profits, and had to re-enter, right? And I looked at this expansion candle right here, and I said, this fair value gap is not going to get traded back to. It's going to become a fair value gap, first of all, and it's not going to get traded back to. And so therefore, I looked for entries only in the smaller circle. Let me delete it now. I only looked for entries in here. And I took entries in here to the yellow line target that we've been had. We've been looking for this yellow line as a target. So when I'm looking inside of that area where the circle is at, right? Whenever this thing could load for me. I don't know why the candles didn't load yet. Oh, there's no candles on the chart no more, y'all. It's over with. Like, what? Oh, they go to 1 minute. I don't know. All right, whatever. You're not gonna see what I was looking for in a 1 minute, but my point is I was looking for PD arrays in this area, and I did not expect price to retrace anywhere up into here. So you might not know why I say in that scenario, price is not gonna go back to that fair value gap. You might not get that yet. But can I just at least expose you to the fact that if you're ever trading a FOMO price leg, there are ways to get in really late. Like if you understand the expectations of delivery, there's ways to get in late. So we found our way into the trade, really trusting and believing that price will not come back into this area. Found our way in and took it. We took price into the yellow line and then took profits in here. Price consolidated for a while before the next move. All right. And so yeah, 130 points was caught on live that day. And then the very last thing I'll show you here is yes, okay. This is a easy play. It's an easy play for you to learn from. Okay. I told you guys about objectives, right? So I'm looking at the chart. I'm on my last account. I wanted to hit my goals on for the day. Hit my goals on all my accounts. I'm good. I got one more account here, and for my funded accounts, like one more funded goal I want to hit right here, like. And I see, yo, price is gonna come to the daily lowest body, the lowest body on the daily time frame. Like that's an objective. Like price is going to go there. Price has to go there. All right. Man, why is it moving backwards? Am I panicking? Or am I seeing this as an opportunity? For me, I see it as an opportunity. So when I noticed, I said, hold on. What are we coming backwards for? If the goal is to get to this yellow line, right?
Maya, turn around now.
Maya, come on now. Hold on. Look, if the goal is to get to the yellow line, all right. And the goal, my fault, y'all. We all been there before. That just gave me PTSD. Look, if the goal is to get to the yellow line, right, and price is turning around, it's turning around. It's turning around like for a reason, my people. Y'all killing me in the chat. So look. My point is, as it turns around, let me show you something. Do you guys notice the manner in which it turned around? Look at this. Oh man, isn't this like repetitive though? Which is a good thing. You need a lot of evidence to like really convince yourself of a concept. Isn't it repetitive how like when you're going against the true direction, you see the nature and the movement? Look at the downside right here, and then look at the upside. You see what I'm talking about? You feel what I'm saying? Look at the downside and look at the upside. Did I believe in that upside? I can't believe in that upside. I can't believe in this upside if we have not hit the yellow line yet. And the nature is disgusting. And the nature is disgusting. All right, so here's the first place where I'll be interested in price action. I think there's a beautiful short opportunity here. If you would have gone short in here, I'm not even mad at you. Boom, price flashes back up. Once price flashed back up, I would chill. Because if price was gonna go, it would never flash back up here. I would chill, you know. But anyways, for me, I'm looking at this whole area. I don't know exactly when I started looking at the chart again. So I don't know if I like looked in here at first, like I don't know, but I just know where I entered that. I probably wasn't looking at it yet. I just know whenever I did get to the chart, I'm like, oh nah, this ain't a real uptrend. And I'm like, we ain't even hit the daily lowest body yet. And we got a 5-minute SIBI. We got a 5-minute bearish value gap. And so whatever. Price BSing, still in the consolidation. I want you guys to notice something real quick. I want you to notice something real quick. There are no PD rays that are working inside of this area. None of these bearish fair value gaps work. None of these bullish fair value gaps are working. So have I convinced you to stop trading chop yet? I don't know if you see double bottoms in here, double tops, and head and shoulders, and inverse head and I don't know what you trade, indicators, and this, that, and third. Nothing will hold consistent inside of consolidation. So if I can just please convince you to stop trading consolidation, just stop doing it. It's gambling. It is gambling. Okay? It's simply gambling. All right. Y'all believe me now? Hopefully y'all believe me now. Y'all can stop doing that. All right. I'm looking at breakouts only in the direction of the higher time frame, right? Okay, so what do y'all think I'm thinking right here? I see how we broke down with a fair value that did not get traded back to right here. And then we're breaking down with another one, anticipating a run on these lows. Plus, y'all know I'm bearish already. So when you see me enter right here with a target of the yellow line, there's nothing to be surprised about. Nothing to be surprised about. It's gonna hit the yellow line. Boom. Target hit. Now, just to show you guys, just show y'all that is this play right here that I had through in the chat. All right. This trade. This is the trade that I'm talking about. So you see where I entered. You see the exit right there. You see it. Now you know the reason why I entered and everything. So now y'all getting background context on why we take an entry here and target the daily lowest body. Higher time frame target, consolidation into a PD ray, take your trade when order flow shifts. Higher time frame target, consolidation into a PD ray, order flow shift, take your play. One more time. Higher time frame bias, price retraces in a consolidation type manner. Wait for order flow to shift in your direction. Take your play into your higher time frame target. Boom, formula. That's how we get into trades that I'm speaking to right here. Formula. Okay, so those are the demonstrations, and then you know, Friday ended up dumping more and stuff like that, but cool. All right, so those are the plays I wanted to show you today. And this is where we currently are, but I can delete all this stuff. All this stuff is irrelevant now. This stuff is irrelevant now. Cool. And yeah, man, this is the completion of the picture that I had drawn last week. This is the completion of the picture right there. Easy money. Do I think we have more to go? I'll tell you in a second. First, let's get into the chart debate. So back to the Discord. Let's look at this chart debate, people. Appreciate you, Alexis. All right, chart debate, y'all. Let's see. This is what the free community thinks right here. The free community thinks on this picture right here. I think the leading answer is arrow 3 so far, but I'm about to look at it again. So this is what it's seen. Well, this is what they seen. If you watch this on YouTube, you definitely want to pause the video and figure this out for yourself, which arrow will play out. It seems that the free community here believes that arrow 3 is the most popular answer, but arrow 2 was a very close second. Arrow 1 is the least popular answer. I was frozen. Dang, man. Thank you for letting me know. I don't know what's up today. Like, everything acting mad funny. Yeah, I think I'm looking at it on my phone now. I think you guys could see me pretty well. So I'm gonna keep it moving. Hey, chat. All right, so look. Yeah, man. So yeah, y'all see those are the results. Now let's check out what the mentees got going on. What y'all think today, mentees? Let's see. Okay, a little more variation. Usually the mentees are all on one side because they all like some plays are just so easy for them, and some of them we get a little bit more of a debate. I've been trying to challenge the mentees the past 2 weeks. So this week, the mentees I mean, 25 out of 37 answers are for arrow 3. So 25 out of 37 of these answers went to arrow 3. Man, mentees, what we think? Are y'all correct this week? I don't know, man. I don't know. I'll tell you what though. Let me tell y'all something. The least likely answer in this scenario, let me pull it back up. The least likely answer in this scenario is easily arrow 2. Arrow 2 is the least likely answer. I'm gonna say that right now. So that's not it. It's either arrow 1 or arrow 3. I'm gonna say that ahead of time. I see the rationale for both, but one is just a little more likely than the other. So I'm about to reveal it after this commercial break. So everyone, today I put iced tea mix inside of my water. I shook it up and I got now iced tea. So I just feel like, you know, if you didn't have time to run to the grocery store to get some juice and you keep some juice mix on you, you can throw it inside a water bottle, shake it up, and now you got juice. You know what I mean? This is good. Who likes iced tea? Like, I don't like iced tea that's like unsweetened. I don't like sweetened iced tea. What? Yeah, I don't care about my juice. What's yes? Y'all so rude. Like, what's that? Oh my gosh. It's like I just feel like you need to like protect other people's feelings. Like for me, I'm hurt now. So I feel like we should have a therapy session as a unit. Thank you. You know what? Because Alexis cares, I'm gonna show y'all the answer right now. Thank you, Alexis. Everybody say thank you, Alexis, because he's the reason why I'm gonna give y'all the answer right now. Let's see if the mentees got it right this week. Nah, not Nestea. Not Nestea. Lipton, my brother. Lipton. All right, let's get it. Let me this Zoom thing is in the way. Let's move that over. Let's pull out the answer today. Whew, I'm nervous, y'all. Nervous. Oh, gosh, here we go. Here we go. Here we go. It's lagging again. I ain't gonna lie. You can't blame me this time, son. I pressed it already. It's lagging. I don't know why it's acting like this. Hold on. Because I don't know why it's not pulling up my pictures. Like, why is it doing this, bro? Now I'm like, the answer is, I'm gonna just have to say it verbally because it's actually not pulling it out. Or just a sign it's not pulling it up. I don't know why it's acting like that. Like, my laptop acting so weird. It's actually getting me mad, but whatever. So the answer, my people, is arrow 3. It's arrow 3. It is arrow 3. Price went aggressively to the downside. I will post the picture in the Discord after the class. Okay. So yeah, the answer is arrow 3. So the mentees, shout out y'all got it right. You know, 12 people got it wrong though. We gonna talk. But once again, I'm not gonna lie. Arrow 1 is not a terrible choice. It's not a terrible choice. It's not a terrible choice, but arrow 3, yeah. We don't like PD arrays inside of consolidation. Not even tripping about this. So a lot of people was probably looking at this bullish fair value right here. We're not tripping on it. We don't like PD arrays inside of consolidation. This is a false breakout. False breakout. On top of that, we're holding this higher time frame imbalance. I ain't a higher time. Well, it probably is an imbalance from a higher time frame, but what I'm saying is a large imbalance. A large imbalance, what I meant to say. Very large imbalance. Price trades into it some more in a real way. Comes down. This is irrelevant. This fair value is irrelevant. Also, based on today's class, now you guys know price legs that look like this are fake. Look at the nature of the uptrend. It's nasty, right? The nature of the uptrend. So yes, wait for it. Higher time frame PD array or whatever doesn't have to be higher time frame. Valid PD array, stagger into a valid PD array, stagger into a valid PD array. We don't like PD arrays inside of consolidation, so that's why the bullish one's irrelevant. You know where it's going next, arrow 3. All right. I'm weak, Mary. So yeah, good. So cool. Yeah, I don't know what's up with my laptop today, but that was that. Now let's see how quickly I could push through these tickets. I'm about to race to tell you guys all my predictions on what I think the market is gonna do in the upcoming week. So let's get to that last part of class right here, and then we gonna finish. I'm gonna try to move as fast as I possibly can. I promise y'all. As fast as I possibly can, bro. Okay, so I just need to zoom out the way and move this over here. And then move this here. All right, so I was talking about time and price theory, right? So you want to know the best days to trade. Days is a way to measure time, correct? Okay, so when I see time and price, I'm not just talking about the hourly, the 4 hour. I'm talking about like the, which days are the best to trade, and the days that'll be the best to trade are surrounding economic events. Nah, bro, I don't know. My laptop is bugging out today. All right, it pulled up finally. Dang. March 31st. Okay. So tomorrow, which is Monday, we have PMI. Y'all know when the Mac has that like loading thing that's spinning? That's what I see on my laptop. I don't think it shows on Zoom though. But I don't know, bro. My laptop is kind of frozen right now. So while I wait for that to figure itself out, off memory, what I do know is it's NFP week, right? So Monday I expect to have some solid price action. Monday of NFP week, there we go. Monday of NFP week should have solid price action. Friday is obviously the draw of the week, which is when the employment numbers actually come out on Friday itself. So Tuesday, Wednesday, and Thursday, you want to be careful. But something that maybe you didn't notice is at 11:25 a.m. on Friday, my cousin Jerome Powell will be speaking. All right, so Cuzzo gonna be speaking at 11:25. You want to make sure that you in tune. Make sure you in tune, because my boy gonna move the market around. You know how that go. Don't get caught off guard. So Friday's a major day, and usually when the market is waiting on a major event such as Friday, the days leading into it could be pretty trash. But once again, the first Monday of any month, or just in other words, the Monday before NFP, the Monday before NFP usually has some solid price action. So I'm very interested in Monday. I'm gonna see what I could do, Bernie. I'm gonna see if I can get him to chill on us, but he kind of stubborn. So back to TradingView. TradingView hasn't been acting too bad for me, so I hope this lets me get through this smoothly. All right, so here we go, TradingView. All right, let's go to DXY real quick. Forex lately has been pretty uneventful, I would say. Like you can tell by like the movement on the dollar right here that it's just been consolidating for real. And then it's been a choppy move up and everything. We're getting a reaction off of the opening of the monthly bullish fair value gap. So where the yellow line is means that we tapped into a monthly bullish fair value gap, but simultaneously we're also reacting here to a weekly bearish fair value gap. So guess what? Didn't I say between a valid bullish and bearish PD rate, that's where consolidation tends to happen? And that's why you notice we've been consolidating in this one little area here. We'll see which one wins the battle. I lean towards price moving to the downside still. All right, so I think the weekly SIBI is going to end up winning that battle. I still think it wants to come into the opening of the weekly bullish fair value as a minimum target. So this is the weekly chart. This is a weekly chart. I think it wants to come right into this yellow line as a minimum target. So I think this SIBI will take us there. And I would like to see it hold the lower half of it to get there, ideally. Okay, so we'll see how that works out here on DXY. And Euro, I think still has upside targets, because as you see here on Euro, when we got bullish on it, our target was this blue area. And so it's like the opposite chart, right? I'm looking for this weekly bullish fair value gap to take me to this blue area. Okay, we get a nice reaction over it. This is the same place I told you last week. I'm looking for bounces. Honestly, when it comes to Forex, nothing has changed as far as my analysis, just because nothing really happened last week. We kind of stayed in place. Last week, my prediction for you was I'm using this to get me to blue. That's it. So we'll see. I mean, same thing with a British pound. For me, I said purple into blue. There's a weekly SIBI up here, purple into blue. And you could see how uneventful last week was. Like I said, Forex has been pretty trash. USD CAD, I think that price is gonna move to the downside. I think it's gonna have a very aggressive move if we lose the purple area, which is a weekly BISI. And I know some people are new here, but anything up and down, like, we've been super accurate about what's gonna happen on Forex, both to the upside and downside. All these targets, the sweep, we've talked about all of this stuff ahead of time before price ever did it. And these are just updates on these plays. So this is something I drew last week as well. I want to see if price could respect this weekly SIBI. I don't think we got there, which is cool. All right, that's fine. We didn't even get there yet, but which is okay. Once again, I'm clearly bearish on it. And I think if we do push up into this, which I could see us we in consolidation, I could see this happening. Um, I'm still aiming for these lows and honestly lower. But I'm bearish on USDCHF as well. And yeah, that covers Forex. And like for Bitcoin, look, we done with Forex already. Let's move to Bitcoin. We almost there. Move to Bitcoin, man. Come on, trading view. Let's go. We almost done, I said. Almost done, I swear. All right, Bitcoin here. Yeah. What was I saying? So on Bitcoin, we called this rejection here at this daily SIBI before it ever rejected. This green candle is literally on Sunday. You can see it was super bullish when I said Bitcoin's gonna reject this blue area. And then I also said simultaneously that I think Bitcoin can consolidate between the blue and the purple. Why? Because they're two valid PD arrays. Who's gonna win the battle? To me, I think blue is gonna win this battle. Even though it's consolidating here, I still think blue is gonna win the battle because I believe NASDAQ has more downside. Spoiler alert. So NASDAQ and Bitcoin are probably gonna move in tandem. I think that NASDAQ actually has a lot more downside. So I think like Bitcoin low-key has a lot more downside too. Did I say my bold prediction to y'all already? I'm pretty sure I said like if Bitcoin could lose 70, if it could lose 70K, I got it going back into the 40s. I think it's gonna lose 70K. Yeah, thank you, Rashida. So I definitely did say that out loud there. Yeah, I think it's gonna lose that area, but we'll take it a step at a time. For now, we'll see the battle between this purple and the blue I had drawn. To me, it gets very bad under purple. I feel like it's gonna get energetic under purple. Right now, it's kind of getting some turbulence on the way down. I think under purple it gets energetic into these lows, and if we lose these, well, first of all, that's already happened in the 40s. That's at 49. But we'll take it a step at a time. But this purple area is very important for bullish people. I just don't think we're bullish still. But we'll see. We'll see, my Bitcoin people. We will see. All right. So that's crypto, and everybody gonna follow suit on the coin. Let's go to Nas World. So as I told you guys, that's crazy. Is we really almost? For real? We almost there like that? Hold on. Oh wow, we going there tonight. Damn. We already at the first target tonight. We about to be there any minute now. I mean, shoot. Some of y'all probably in this trade. I feel like trading this. What's up? We gonna come here. I don't really recommend Asia trades, so please be careful. But this 19126.50, that's my first target on NASDAQ to the downside. That's the very first target. Next target I would look at is half of this wick on the weekly chart. Half of that wick is the second target, and of course the bottom of the wick is the third target. Now, what do I think will happen? I have a feeling that we'll get a reaction around here that'll push us back like that before we go lower again. So I don't think we're gonna just go straight through. I think we're gonna react probably around here, but I'll take it a step at a time. Nonetheless, anything to the upside, I don't believe in it because I think NASDAQ goes much lower than all of this, lower than this green wick, lower than here. I think, bro, NASDAQ has a lot more downside, that's all I'm gonna say. But I'm just trying to take it one target at a time. And anybody who been with me knows I've been talking about this for literally months. Had these targets on the downside, everything for months. So yeah, this is the current view of the 5-minute chart. Price gap down, filled the gap, rejected. Mentees, this goes back to our gap theory class, mentees. Phase 1 mentee. This look like gap theory class, don't it? That's exactly what we talked about. Anyways, and then we got this target here. And like you said, there's a new monthly candle coming out on Tuesday. Thank you, Alexis. That's a fact. Yeah. This trade is pretty simple, but I gotta teach. So here we go. Y'all owe me money, man. Oh my gosh. Man, this is for free. This is crazy. All right, so look, ES. I'm trying to get ES up. If my laptop could stop lagging, I swear we will be done with class in 5 minutes, bro. and my laptop can start lagging. All right, ES is up. Let me go to the daily. My face froze to everything. Yeah, that's a fact. Oh my gosh. I see it on my laptop. I mean, on my monitor. Aye. Hold on. Okay. Yeah, y'all could hopefully still hear me. Hopefully y'all still hear me. Everything should be good. Let me try turning the camera back on. Hopefully it helps. Hopefully. Yeah, I know, but I just want to make sure if I could get it back working, we'd be good. I don't know. Yeah, I see it. It's working. I know, right? They owning me, man. They owning me. So, ES, I had the same analysis. This is something I put on the watch list last week as well. We wanted to see it reject the SIBI. Rejected it perfectly, came down. We don't believe in these choppy moves up. Boom. It's very important for the weekly to close under 5580.75. To me, if the weekly, so you won't know the answer to this until the end of Friday, right? If the weekly can close under 5580.75, that to me is confirmation on the bear market. Right now, we've corrected already, right? But I want to confirm a bear market now. Like, I want a bear market. So, like, to me, it's confirmation that we're gonna head there if we could get a weekly closure under there. Weekly lowest body is still a target. So even though a Nasdaq's about to hit their target, there's a target here at 5516.75 on ES that I think we're gonna go for. That's a short-term target on ES. And then I would do the same thing, right? So let's show you ES. I would look for the 50% of this wick on the weekly chart as the next downside target. Of course, the bottom of the wick too. But I do feel like there's gonna be turbulence in between that. Like I just have a feeling we're gonna have some turbulence before we ever go back to them lows. So we'll take it a step at a time. Like I said, one target at a time there. Mentees, I believe it was Thursday, we went over how to handle wicks from a weekly time frame. Remember the levels that I told you to put on there. So keep that in mind too. I only gave 3 levels in here for this class, but I want y'all to also put the other ones on there just in case, okay? And then Dow Jones, I talked about price rejecting this SIBI as well, that we got the rejection. On the Dow, I still want to take the lows from March 10th, the week of March 10th. Still want to take those lows. And yeah, I mean, when I look at the Dow, I'm not gonna front, like, it looks so bad to me. To me, the Dow is like a easy call to, and I hate saying stuff like this because I don't want to jinx it or anything like that, but like, I'd take Dow to 39,558. Like, I don't really believe in anything to the upside until I see at least 39,558. At least, like, the big at least, yo. So to me, that, like, to the Dow, when it comes to the Dow, I would look at bearish PD raise and expect them to hold. If this could become a 4-hour bearish fair value gap right here, I want to see price reject this. If it trades into the higher one, it needs to respect the lower half. If it trades into this, it needs to respect the lower half on a Dow. All right. But I'm bearish on it, got bearish targets. I don't really believe in upside until we hit certain areas. All right, so keep that in mind. And Russell is playing well. I'm about to turn B adjust off. So if you have TradingView, when I talked about the Nasdaq, please don't miss this detail. I don't want to throw you off. When I talked about the Nasdaq, the ES, the Dow Jones, on TradingView, I had B adjust on, okay? I am about to turn B adjust off. All right, B adjust is now off. And I'm on the Russell now. B adjust is off. So on the weekly, on the Russell, we rejected the SIBI. We wanted to see it reject. Beautiful, that's nice. And we started coming down. On this chart, when B adjust is off, there is a monthly bullish fair value gap right here. That is what I think the Russell wants to trade into. So I don't believe in anything to the upside until we hit this purple. I don't think we're going to necessarily reverse from there either. Please don't get it twisted. I'm not saying this is the bottom. I'm just taking it one step at a time and giving you guys a target. So I don't believe in anything to the upside. So I have a destination that I got from a monthly. So how do you think I handle that hourly now? I look for 4-hour and daily and hourly PD arrays that can send price back to the downside. right? And we talked about this in the demonstrations, having a higher time frame bias and using PD rays on time frames below it to get you to that bias. Now, CL, I told you guys a lot will depend on if CL could close over this daily bullish fair value gap. That's what I said on the class last week. CL got there and it closed over it. All right. Only reason why I'm low-key about to potentially stay away from CL, put it like this, I will stay away from CL if we get CL to close under this low right here at 68 point, what is this? 0.52. That if we close under there, I'm staying away from it. Because I guess what I'm trying to say is like it has a really bullish setup right now, but the delivery is nasty to the upside. Like I don't like how the move is starting. So there's a potential that we could end up just chopping in this general area. Okay. So far, the bears have been invalidated. Because a bearish person, first of all, they should hate this delivery as a bearish person. We got to the target that we targeted. Remember, we took it from circle to here. There's literally the plate. Circle to here was our play. We got to the destination, and there have been no PD rays besides this blue one. Invalidated it. Now that we invalidated it, the bears are out the question. I'm only focused on bullish delivery now. So when it comes to bullishness, we haven't like invalidated anything, but it is a suspect move, right? Like we haven't done anything wrong yet, but it's like, why are they staggering up down? So my eyes are open for consolidation hitting this ticker. So in order to stay bullish, I need price to stay above 68.52. And if it can remain bullish, I would target on the short term 70.94. In the short term, if we could trade above that, then I think price has a chance to come into these highs and just take it a step at a time. But that's my take on CL. Gold. And go get to the target yet. So I told my mentees the gold's contract, the gold be adjust. Let me see what I have right here. Hold on. Be adjust is on. Okay, let me turn be adjust on. Hold up. All right, cool. Be adjust is on. When it comes to gold, be adjust is on. All right. So the gold contracts changed last week and it made price look like it gapped up. It didn't really gap up. It's a fake gap. It's a fake gap. The contracts changed over. I don't feel like explaining that, but it's a fake gap. So I had to give new price levels based on the contract changing over. So I gave my mentees last week, I said 3133.8 is where I have gold going. Okay, and so mentees, y'all see we almost at that target now. I don't really believe in anything to the downside per se until that gets hit. Like I said, I don't marry destinations. I'm a married delivery always, but like I do see gold trading back up into that level. My computer's just lagging a little bit. Even though it's pushing down, I know it almost got there. It got real close. I still think it's going to get there. Where would I give up on that though? I'd probably give up on it if we. I mean, I want to see gold hold this, right? Like I wouldn't want to see gold invalidate this. To be real, I wouldn't want to see if gold invalidates that. I would just chill and maybe take a breakout. I'll take a breakout into the yellow line, but that's it. But yeah, so we'll see what gold want to do in this area here. But I like 33.8. That's my next all-time high target. I would have to like give you guys new targets if that gets hit. But if you've been following me for a minute, you already know that. Where was gold when I called the first target? Gold might have been down here. I called the first target, and then this was the second one. So I'm actually trying to get to the second one. We already hit target 1 from a couple classes ago. This is target 2 we're looking for right now. All right. And then Nikkei, I talk about this one sometimes. I just like to show this because last August, I think it was, I said I want to see price reject this SIBI. And it literally since last August we consolidated here, but it's finally breaking down. I wanted to see it come back into this yellow line down here, and it's finally breaking down. I think there's opportunities coming on this ticker. It's starting to get real energetic. I think it's gonna get very bad to the downside. Like this is just something to look at. The reason I'm looking at it is because I like to trade tickers when there's a clear direction. To me, there's a clear direction to the downside. So, if you want another option to look at, The Nikkei has something for you to the downside. QQQ and SPY is my very last tickers. They both did the same thing. Nasdaq and ES did, of course. That weekly SIBI worked beautifully. Just putting it on video this time. I said this a few weeks ago, but to me, my bear market prediction is price coming down to at least 382.66 on QQQ. 382.66, and on SPY, I have it coming down to at least, come on, 466.43. Yeah, 466.43. That's why I would come down to. Now, yes, there are some options tickets I wanted to go through, but because of time purposes, I'm gonna have to like forego those. But I will say, there's tickets I've spoken about in the past that have absolutely been playing out, like CRM. Like, man, I don't even feel like going through, but it's a lot. They've been playing out, and we're gonna see how it go. But and by the way, Nvidia. I mean, we've been killing Nvidia. Trash delivery, but Nvidia's gonna keep dropping as long as the market is bearish, and I do believe the market remains bearish. And so, yeah, man. But with that being said, man, if you're watching this on YouTube, subscribe to the video, like the video. Definitely tap into the mentorship. It starts in just a couple weeks from now, and a few weeks from now. There's still time. DM me, follow me on Instagram. You know the deal. Join the live trades if you could. It's the link is inside of the description box once again. And with that being said, everybody, that's all she wrote.